Welcome to the Singapore FinTech Festival. Welcome to West Africa. Good afternoon, good morning, wherever you are in the world. And if you are live here with us, we welcome you to West Africa. My name is Sabine Mensah from UNCDF, and it is an honor for me to be here with all of our partners and facilitate the discussion and bring the fintech ecosystem from West Africa to be on this illustrious platform of Singapore FinTech Festival. I was saying to somebody earlier today, this afternoon I am in Singapore. Isn't that amazing? Technology makes this available. Digital is enabling this, and we are all connected on a platform wherever we are, despite the geographical distances between us, but despite the physical barriers between us. I think we are very fortunate, and in an era where technology is no longer the barrier, actually it's quite an enabler of inclusion, an enabler of access, financial services, innovations that can help the unbanked, people who are not visible to the formal ecosystem, and can bring us all together to really see to what extent we can take this forward and provide services that are adapted to the needs of the most vulnerable population. I'd like to thank all of our partners who are here today with us, starting with the central banks who have agreed to be our partners on this panel and who are participating or listening in. So thank you very much to the Central Bank of Gambia. Thank you to the Central Bank of Sierra Leone, and thank you to the Central Bank of West Africa Economic and Monetary Union, and the CIO, for all your support. And I would like to also thank my colleagues, the unsung heroes of UNCDF, all across the world, who have worked really tirelessly to make this happen. So I would like to welcome Dr. Sekou Jabi, First Deputy Governor of the Central Bank of Gambia, for his opening remarks for this session. Dr. Sekou, to you.
Thank you, Sabina. Thank you for that introductory remarks. I go straight to my opening address. Governors of the Central Bank of West Africa, the Sierra Leone BCAO, and all other central banks present, senior government officials of UNCDF, you have Hagar, Nyanya, Sabi, Clara, and other officials present, other senior central bank officials, key stakeholders present, the distinguished fintech companies present, all other protocols observed. It is indeed an honor for me to deliver the opening remarks at this all-important Singapore FinTech Festival of West Africa region on the theme Building Inclusive Economies in Digital Era. I wish to thank United Nations Capital Development Fund, UNCDF, for facilitating such a session. Also, its continuous support since the coming of the new dispensation in this country. Its continuous support on behalf of the Board of Directors of the Central Bank, the Governor and staff of the bank, I wish to extend our appreciation to UNCDF through its officials present for the support in the financial inclusion space since we started the financial inclusion programs. They've been with us. I look forward for more future partnerships. This FinTech session could not have come at a better time when stakeholders in the Gambia, in collaboration with the UNCDF Alliance for Financial Inclusion, IMF and the World Bank, are formulating and implementing the National Financial Inclusion Strategy in the Gambia to address all facets of promoting digital finance in the country. Ladies and gentlemen, the unflinching commitment of our governments to youth and women empowerment underscore numerous initiatives across sectors to increase employment, skill level, unrestricted access to finance at both rural and urban areas through fintech systems to enhance lives of women and youths. Madam Chair, the Sub-Saharan Africa region is at a turning point, being the world's second largest, fastest growing region after Asia, with annual GDP growth rate of in excess of 5% over the last decade. The continent has also shared youth population showing brighter future for growth and development, being the largest youth population in the world. Despite this growth, the Arab Spring events show that the good economic growth in the continent has not translated into shared prosperity in most economies, and better lives for the majority has not been inclusive. Chairperson, the growth and development has to be economically inclusive to be socially and politically sustained. In the Gambia, the government has opened the economy to new opportunities to stimulate economic growth. The economy grew by 6.5% in 2019, premised on growth in agriculture, construction, trade, and tourism. The economic fundamentals remain stable, steadfast with low inflation of 5.6%, stable economic foreign exchange market, low lending interest rates to boost private sector credit. Despite the challenges of coronavirus pandemic in 2020, the challenges of youth employment and financial exclusion with high informal sector in the continent remain key challenges. The increasing level of financial inclusion is at different levels across the continent, with Kenya, Tanzania, Uganda, Ghana, Nigeria showing high levels of broad financial access, while the rest of the continent are lagging behind with limited outreach, particularly in the remote areas. The low and volatile income levels, inflationary environment, high inflationary rates, high illiteracy levels, low financial sector debt, inadequate infrastructure governance challenges, as well as a high cost of banking and doing business in Africa are some of the factors explaining limited financial outreach. At the global stage and national levels, policymakers have been embracing financial inclusion as an important development priority. Financial inclusion is highly topical globally, hence made one of its pillars in G20 St. Petersburg Summit. The World Bank postulated the global goal of universal access to basic transactions as an important milestone towards full financial inclusion, a world where everybody has access and can use financial services to capture opportunities and reduce vulnerabilities. Hashtag leave no one behind. Financial inclusion is a multidimensional concept and encompasses all initiatives from both supply and demand sides within the financial sector. They include provision of appropriate and quality financing that is available, accessible, and affordable to low-income and other vulnerable households, notably youth and women that are traditionally excluded from the formal financial sector in our part of the world. FinTech is the main driver of financial inclusion. We must employ all efforts and energies to roll out digital finance globally to bring on board 1.7 billion people excluded from the formal financial system. As global financial sector embraces advanced technologies and innovations in financial intermediation, intensity and risk exposure continue to increase in tandem. The issues of cybersecurity issues became more prominent than ever before. In recent years, regulators and financial sector supervisors have become increasingly aware that financial services aimed at addressing financial inclusion challenges around the world are becoming vulnerable to cyber threats, primarily due to the increasing role of digital finance in the delivery of financial services. According to Global Application and Network Security Report, an average global cybercrime is around $800 billion a year, growing to 10.4 trillion by 2025 to 2030. Cybercrime costs organizations $24.7 million a year on year. This would increase to $2 per minute, $2 million per minute, Risk report reveals. It also has a per minute global cost of 11.4 million by 2021, a 100% increase from 2025 levels. Overall, its impact is greater with a potential to destabilize the global financial and payment systems, global de-risking, and its consequences, considerable loss to the banks, among others. As financial services become increasingly digitalized, the volume of sensitive digital data grows exponentially, and with it, the potential of personal and system impacts of data breaches continue to be key challenges. As such, the need to safeguard from illicit access to this data becomes increasingly important. In the course of implementing and facilitating and coordinating role to enhance financial inclusion through leveraging on digital financial services, targeting the unbanked and unsophisticated customers, it is realized that stakeholders need specific guidance on addressing cybersecurity risk through demand side as well as supply side perspectives. focusing on the peculiarity of financial service provisions targeting the bottom segment of the pyramid. It is welcome to recognize the setting up of a digital financial services working group on cybersecurity by Alliance for Financial Inclusion to ascertain cybersecurity risk in the light of digital fintech innovations. Further, the subgroup will also provide policy recommendations to monitor, identify, manage, and mitigate cybersecurity risk, including development of cybersecurity risk guide. It is my hope and belief that the knowledge shared in this FinTech Festival and the subsequent recommendations that will be born out of this prominent
Thank you very much, Dr. Siku, for your opening remarks.
Right. As key stakeholders, we must believe in the concept of financial inclusion as a way forward.
My apologies. It seems like we're having technical difficulties with Dr. Siku and the end of his opening remarks.
Yes, as policy makers, we urge for an enabling regulation that will not hinder but promote innovation while balancing risk and consumer protection. Financial regulation has vulnerabilities and imperfections in the financial markets that weaken financial stability, undermine market efficiency, and expose consumers to risk. Technology and regulation closely interact, with the latter having an important influence on the development of the former. On this note, I wish you all successful deliberations, and thank you all for your undivided attention. I thank you all. Thank you.
Thank you very much, Dr. Siku, for your time and these great opening remarks. It is time for us, as we move on to our agenda, to see and discuss what fintech innovations can do for SMEs, particularly as it relates to financing the missing middle, as it relates to access to capital and access to finance. I am really honored to be here today with my colleague Ariana Gaspari and our partners across different countries to facilitate this discussion on fintech innovation and SMEs. Ariana, this is to you.
Thank you very much, Sabine. Thank you all, and thank you, Dr. Jabi, for such insightful remarks that give us the floor to navigate how fintech can drive the innovation and support MSMEs. My name is Arianna Gasparri, and it's a pleasure for me to be here today to moderate this panel. I'm the financial inclusion specialist for UNCDF in Ghana, driving the efforts in country to build inclusive digital economies. It's my pleasure for today to have panelists from all over the world that I would like to introduce. Let me start with my colleague, Hilda Mora. Hilda is the CEO and founder of Pesesha, a crowd investing platform, active in Kenya and in Ghana, thanks to the work we are doing with UNCDF. I would like to introduce Nazir. Thank you, Nazir. Welcome. Thanks for being part of this panel. Nazir is the CEO of Loft. It's a Luxembourg house of financial technology, which is a private and public initiative to drive fintech innovation. We then have Francis from Innovation Sierra Leone. Hi, Francis, and welcome to this panel. Thank you for your participation. Francis is the CEO of Innovation Sierra Leone and have more than 25 years experience in the fintech and entrepreneurship sector. Last but not least, I would like to introduce Sidi from Insys Global. It's a pleasure to re-meet you again here after our work in the Gambia. Sidi is the CEO of Insys Global, a software company in the Gambia, driving digitalization for MSMEs and help them to de-risk when they access to finance. Thank you all the panel members. It's a pleasure to have you here, and it's a pleasure to host this panel at the Singapore FinTech Festival. But let's start the conversation. I would like to open the discussion. We know actually that especially this year during the pandemic, SMEs have been struggling when they access to finance, and they have experienced challenges in their growth and in their potential to create job opportunities and create the ecosystem around their communities. We also realized during this year, during the pandemic challenges, that fintech and in general financial innovation can drive a change in support of these MSMEs to unleash their potential at the benefit of an inclusive economy. I'll stop here, and I would like to hear from my dear panelists what is, in your opinion and according to your experience, what are those needs of SMEs and why they struggle when they try to access to finance. I would like to start with Hilda. If you can share your point of view, please, in this regard, and then I will also ask the panelists to join. Thank you.
Thank you, Ariana. I will start by saying that COVID pandemic has tested our resilience more than ever before. It has tested economies, countries, big companies. But I think the most vulnerable community that has been tested is the small businesses, both formal and informal. And I think that leaves us to a stage where we see their needs and their challenges become, the lack of skills to be able to handle the current pandemic, the ability to be able to reset and survive during the current pandemic. What do they really need to be able to recover? The reduction of supply and credit, of course, at the center of it all, helping them to survive. What has this really led to? I mean, beyond curtailing these businesses almost to close off shop, it has led to lost jobs, dried up liquidity. We have basically seen most of these businesses almost starting to stay afloat. This is where Pesesha really helps to provide is financial services to these businesses in the missing middle. But again, we hope this is temporary. It's not going to be a long-term problem. And so for us, we've seen those needs of lack of skills, credit, and reduction of supply and demand become very, very paramount to helping these businesses to recover. And so for us, as Pesesha, we take a collaborative approach to tackle the $328 billion financing gap across sub-Saharan Africa. And we are currently in Kenya and Ghana. In Ghana, we're working with UNCDF to really help us. We are working with the informal sector. This is businesses that have no structures. They are basically very few employees. They don't have a very huge turnover, less than $10,000. And so we're saying as Pesesha, how can we help these businesses to meet these needs? Maybe just to go back a bit, a recent study by the BFA stated that 52% of these businesses are closed and has reduced. What are we doing? So we have made it as part of our fiduciary duty as Pesesha to create resilience to these businesses by helping them to access affordable and of course helping them to continue to contribute to the economy because they matter. They are part of the reason why post-COVID, the economy will be able to strengthen and go back to what it is. And so for us, We believe we're sitting at the center of the needs of these SMEs more than ever before, and at the same time, really helping them to be able to reset and thrive post the COVID period. Thank you.
Thank you, Hilda. Very, very insightful inputs. Now I would like to hear from Sidi and Francis. Maybe Sidi, you want to start your understanding of those needs, right? Why MSMEs, they struggle when they try to access more traditional finance. Can you please share your experience from the Gambia, and then I would like also to hear from Francis. Thank you. We can't hear you, Sidi.
Sorry. Thank you for having me, and thank you, Ariana. I think that from Gambia, one of the biggest challenges that we see, and I think this is something that's reflected across West Africa, is that a lot of the businesses are not structured, and as a result, they're impacted both on the supply side as well as on the retail side and access to market. When COVID hit, I think for Gambia, it happened a little bit differently, where there was an outbreak everywhere else in the world, and everybody kept saying that there was no outbreak in Gambia, no outbreak in Gambia. Then all of a sudden, people started getting sick, and businesses, the government then asked all businesses to shut down. And this created a real problem because, for small and medium-sized businesses, this really meant that they had no income. Those that had perishable goods started seeing their goods spoil. For those that had goods or had existing loans, of course, they did not have that bandwidth to be able to sustain their businesses because they had to again repay the little debt that they already had taken on board. But then, of course, as well, because of the lack of structure, they really did not understand how much do you actually have in stock. Well, where were you exactly in terms of your business? What was your stock? What was your cost, and so on? So this presented a challenge. As we engaged businesses, we found that there was almost a degree of desperation in that they needed help. A lot of them felt that, okay, digitization or technology was the way to go, but then the other challenge was really understanding how can technology actually help you. It does require a change in mindset, a change in approach to how you conventionally run your business. And literacy became also another big factor in that, while especially among some of the more vulnerable groups, such as women, there was a huge enthusiasm in terms of we want to participate in this digital space, but the technical capacity, the literacy was, of course, another big challenge that we need to help them overcome. So what we've been doing with AfriJula platform has been not only what has been interesting as we scale out is that we find that it's one thing giving a platform that they could use to be able to organize themselves, and another thing entirely to actually help them to get that to train them in terms of not only how to use a tool, but also how to develop basic skill sets in ICT to be able to navigate, how to be able to restructure your business, basic financial management skills to be able to really appreciate what the benefits are and how to move forward in a digital marketplace. Then I think the other main challenge we found that we needed to help a lot of businesses overcome was access to market. Because as we found that a lot of our existing subscribers as well as new potential subscribers would say the same thing. But guys, we can't really do anything. Our business is closed. So we really had to pivot to be able to say, hey, since you have all this stock on our digital platform, why don't we give you access to a digital marketplace and start helping you link in, connect to existing digital marketplaces so that you can actually sell your goods online. And I think ultimately that is the new frontier for us, where wherever you are in Gambia, you could sell to anyone else. And I think that is really what the digital revolution will be for us.
Thank you very much, Sidi. Thank you very much. I would like to hear from Francis now. Francis, you are an entrepreneur also, so what is your point of view when it comes to the needs of these MSMEs?
Thank you very much. It's a pleasure to be on this platform. So from my approach, I would prefer to answer the question from a sectorial perspective because it's a very broad brush, MSMEs, but we can also just start with the current discussion, COVID. For me, it's a mixed blessing. It's a mixed blessing because it has really exposed the need to have, as CD says, structure. One of the needs that you find here is that most of the SMEs, irrespective of sector now, are not registered. They are not a legal entity. And so we need to look at what are the carrots and the stick, because they know there are benefits to them being in the formal sector. As an example, there were a number of financial solutions or aid to MSMEs, but accessing those funding meant you need to show registration, you need to show taxation, and they didn't have it. So there you now have that they realize that they need to be in the formal sector. When we recently took part in the FinTech Challenge, we did a deep analysis, a business model canvas, etc. And of course, you all know the supply and the demand side. So what becomes very clear, very fundamental, is that the whole process for MSMEs to get into the financial sector is very complicated. You know, even for those of us who you can say are well versed in this, the amount of forms you have to fill to open a bank account, all these processes makes it discourages people. And I also think that the banking system is not very responsive. There is the new predictive banking. So there is a need for both from the supply and the demand side to address this issue. And I also believe that we need to have a look at how we can converge non-financial data with financial data so that these MSMEs can be able to be visible in the system. So and of course, you know, they all need money. They all need financing, short-term, long-term financing, etc. But their needs must be looked at from a supply and a demand side perspective. And on a sectorial side, which is a bit more interesting for me in the agri sector, the lack of traceability there means that you're not really able to have any good insight into the input and the output of these entities. So this is from the perspective of what from Sierra Leone.
Thank you very much, Francis. Thank you for your contribution. And now I would like to hear also from Nazir, from your perspective, if you would like to complement and add. Thank you.
Sure. Thank you very much for inviting me to be part of this panel. I think a lot of the key points have been said. You know, there is an issue generally around the access to the banking system and access specifically, firstly, boiling down to creating an identity, so registering, being part of the formal economy, and also then access to credit, as has been pointed out. I think if we're talking specifically about the COVID-19 situation, the problems I think you are seeing in the MSME sector in developing markets are amplifications of the problems that you see in Western markets. Firms, due to the confinements, due to the risks that are presented from COVID-19, have basically are being squeezed, as has been said previously by CD, on both sides, from the supply side and the demand side. And that's creating liquidity issues for firms. Now, the word credit has been used here. I would argue that in this kind of situation, credit is not the right tool for an MSME to access to shore up its business and continue to function. Credit is a capital injection into a business that should be utilized for growth, because then through that growth and increase in profitability and revenues, they can use the increase to be able to pay off the debt, because there is a maybe not immediate impact to cash flow, but there is a prolonged impact to cash flow from the refinancing requirement, or from the repayment side of things for the debt. We have to look at capital here as to how we can distribute capital more effectively to MSMEs in the developing markets, in the same way that capital has been made available in, say, the EU via various forms of subsidies, various sort of taking over, say, salaries, etc., which is sort of an introverted or inverted way of providing capital to MSMEs. Other forms of capital, be it some sort of equity, quasi-equity, or subsidy base, and grant base, has to be delivered to MSMEs on a large scale, rather than providing them access to credit, be it guaranteed or not. Because on the flip side, institutional firms, banks, and micro lenders, etc., are concerned in terms of granting credit, because ultimately we have a situation with a great deal of economic uncertainty that is only going to increase the potential for non-performing loans, which then puts the financial institutions at risk if they have a large number of defaults. So there's this vicious spiral that's occurring, because firms getting into trouble, employees therefore have a risk of their paycheck, therefore they're going to be spending less, therefore other retailers and other firms are going to get into trouble. Banks don't want to lend to MSMEs because they're worried that they might default on loans and there is a high risk, so they're shutting up shop. So there's this vicious spiral that kind of needs to be broken by some level of government intervention or national intervention, or entrepreneurial intervention through financing by equity or grants. I think that otherwise we are going to see significant problems. As I said, this isn't just unique to developing markets. This is a problem that the US, that Europe, everyone is facing. Because it's a difficult spiral to break. But in terms of distributing capital to the broad sector of MSMEs in developing markets, I think therein we have to look at fintech solutions, we have to look at localized solutions and digital, as that is the most effective and efficient way of distributing capital to the firms that most need it.
Thank you, Nazir. Thank you very much. And actually, I'm glad that you mentioned the last sentence, which actually helps me to ask you my next question for you. So especially this year, we have seen that the fintech revolution and its potential to help MSMEs, because I hear you saying that in terms of needs, SMEs, lack of skills, access to market, capital, informality, and especially this year, we have seen the fintech industry coming to help and to cover and to address these challenges. And I'm glad to be here with you today, as you are providing concrete solution for such ecosystem. So I would like to hear from you, and I would like to start this time with Nazir, about the solutions that the fintech industry is providing and your organization is helped to achieve. Thank you.
Okay, thank you again. I mean, we ourselves as the Loft don't develop solutions for markets and to solve challenges. What we do is we act as a force of support for institutions and startups that are looking to develop challenges, and we put a particular focus on financial inclusion. We run a boot camp every year called Catapult Financial Inclusion Africa. Hilda has been an esteemed alumni of that program. Maybe she can say a few words about going through it with us. I mean, we don't profess, we are sitting here quite comfortably in Luxembourg. We don't profess to be deep down on the ground, understanding the actual on the ground situations of various SMEs and their customer bases out in Africa. But what we can do is understand on a general scale how businesses, be it in Africa and specifically in Africa, can manage their business risks. So to help with an education foundation around managing your business risks, to help these businesses that are trying to solve the problems in Africa to increase the likelihood of their success, right? As well as providing them with connectivity to potential stakeholders, to partners, and to other areas of the EU's financial services system, so that they can work with these institutions, work with maybe more experienced entrepreneurs to be able to ensure that they continue to strive to develop and be successful in Africa, whichever country they may be in delivering their solutions that can enhance the situation and provide more inclusivity for financial services. I mean, I will defer mostly to Hilda, who is a solution provider in this case, but we have worked with a multitude of fintech firms and are always so highly impressed the incredible ways and solutions and drive that these firms have to be able to solve the problems around inclusion, financial services inclusion within their respective markets. I mean, I think from a business side of things, and where COVID-19 potentially may make the situation harder for fintech a little bit in terms of growing and scaling and ensuring their survivability, is this element of skills and resources. I mean, people are scared right now. We're going into an economic downturn on a massive scale across the globe that's going to affect all of us individually and as businesses. When that happens, people tend to behave slightly differently. And I think one of the things that we've seen as a consistent theme across all of our programs is this element of entrepreneurial spirit, entrepreneurial drive, that not just the founders, the CEOs of these fintech firms need to possess and must possess to be successful, but that you also need to see within the people working for you this desire to make a difference, a desire to achieve, that sometimes that leads to creativity, that leads to people executing effectively, that leads to people really trying to solve problems, being ingenious, being agile in terms of the way that they build their role within an organization and ultimately build that organization itself. In a situation like this where people may be fearing for their jobs, they may close up, they may not want to take as much risk as they used to. So that could impact, the growth rates or the penetration and success of a variety of fintech firms that are looking to do good within various countries in Africa.
Thank you, Nancy. Very, very true. But it's good to have organization like yours to support the ecosystem. Now, so I would like to hear from Hilda, maybe, to link your intervention here with the solution that Pesesha is bringing to the table to support SMEs.
Thank you. Thank you, Ariana. I must say that the way I think about solutions is it's going to be a collaborative effort. It's not going to be just about, the private sector, the fintechs where, Pesesha is involved. What, for example, the public sector is forgetting, especially governments, is if these businesses die during the current pandemic, whether they are profit-making businesses or they were very well resourced companies, is if they die during the current pandemic, the likelihood of them coming back is very, and so it's gonna be a collaborative effort for all the stakeholders in the ecosystem to play their role and to play their part in really helping these SMEs to be able to weather the storm and recover during the current pandemic. And I must add that we have played a pivotal role as Pesesha to really make that as part of our fiduciary duty, in the solutions that we've offered. For example, we just recently partnered with MasterCard and Google, and of course UNCDF, to really provide resilience capital or funding to underserved, SMEs who have been affected by COVID. And these are SMEs who are disadvantaged. Most of them are women. We're talking about 80% of them being women and youth. And we have played a pivotal role to bring our financial infrastructure to really help to disburse affordable capital to these underserved communities through models such as crowdfunding. And I wanted to mention to Nazir's point of beyond government playing a role, what fintechs like us are also doing is we have rolled out alternative models such as crowdfunding that are provided transparency and allowing local individuals to participate in providing capital in a productive manner and allowing these businesses across supply chains to be able to succeed during the current pandemic. And those alternative models, we are very excited as PEZESHA. The regulator has given us blessings. We recently gotten the Capital Markets Authority to give us an approval. And I think this is the time for Africa to think about harmonization of regulation so that we can scale certain models such as crowdfunding to allow for underserved communities to be reached with access to capital. The other thing we've done is access to financial education. We've rolled out financial education across Africa. Of course, Ghana and Kenya being our primary markets. And the way we are doing it is allowing SMEs to go through debt stress. So right now, as much as capital is a huge need, it's really important that we establish a national agenda. Financial health as a very important component, as much as financial inclusion and financial access is as a priority of that. And so we've made it part of our responsibility to educate SMEs that it's important to think about the debt, making sure they don't get over-indebted, and of course not perpetuating the debt cycle in the end to end up in a vicious cycle. So we have continuously educated them through chatbots, AI, and many others through agent networks so that they can understand why they should take credit and why they should be very careful about the credit they get during this time. And of course, we have played a pivotal role to be the voice between public and private sector. We've sat in conversations where regulation is being drafted, stimuli packages by government beyond tax. But then the question becomes, what kind of incentives can we give on the table to allow SMEs and informal sector to be able to participate in a formal manner, to be more structured, to allow their data to be accessed, to allow us to build credit scores for them. We have so far created more than 200,000 credit scores for the informal sector, businesses that never had a credit score before. And so we're very excited about some of the things we've done to accelerate and create hope for the future. I want to finish by saying that a lot of these solutions, as much as collaboration is going to be at the stem of it, we are saying as PEZESHA, can we be able to collaborate even with banks and other regulated entities to bring brightness into this pandemic, because that's going to be the only way that these businesses are going to survive. And for us to be able to achieve that, I think three things need to happen. Government need to play their role in not only just providing an enabling environment, but allowing information asymmetries to private sector needs to come in, not only just us as fintechs with agility that we have brought on the table, but also other private sectors willing to allow us to access data for us to be able to credit score their SMEs and provide access to capital in affordable manner. And of course, lastly, it's really the aspect of allowing these economies to survive by ensuring that we think beyond, COVID and having forward-thinking mindset. The future is here, and so the most important thing is for us to say what can we do to ensure that other initiatives such as open banking become reality now more than ever, to make sure that everyone is included, including the SMEs in the rural area. Thank you very much.
Thank you, Hilda. Very inspiring. Thank you very much. I think, yes, indeed, this comprehensive approach, so not only fintech, but the whole ecosystem will drive change. However, we recognize that fintech are the fuel for this change. I would like to give the floor to Sidi now to hear what Insist is doing to bring a solution for MSMEs.
Sure, thank you. So I think for us, I think if you look at history, I think whenever there's a major challenge, I think the strength of humanity is to be able to rise up to that challenge. And I think that we are now beginning to see that. And so I think for me, it's not only we see COVID as a challenge today, but something that we can go beyond. And I think the question should always be, how do we enter the new future post-COVID? The best way out, one of the things that we are trying to do, or we are doing, is that we are really looking at how do we help you, the SME, to be able to fully digitize your business and to be able to understand what is coming in and what is going out, and to be able to have that degree of transparency so that when you engage a bank or financial institution, they can have that 360-degree view into your business, and that will ultimately give them a lot of confidence into investing or supporting you to be able to expand or grow your business. However, what COVID has also helped us understand is that we need to be able to go beyond that. It is one thing for us to be able to provide this 360 view into an SME's business, but then how do we link some of the other possibilities? How do we create that ecosystem that allows a business really to be able to get all the necessary support? How do we work with those in the capacity building sector that are trying to train businesses, help them to structure, help them to set up, organize their business, register their business? How do we also link them with fintechs that are looking, or microfinance institutions that are willing to lend to some of these high risk groups? So how do we bring this ecosystem around so that really we can support the businesses end to end? Because I think ultimately, when you look at the businesses, that's really what they need. We need to be able to create sort of a pipeline, if you will, where you can take a business from getting structured, getting registered, getting organized, being able to fully digitize, but also being able to have access to markets. So on the supply, on the demand side, being able to link them to payment gateways, payment facilities, and also being able to link them, for example, bringing on board delivery companies, and also encourage startups in this sector, because really it takes a whole ecosystem to be able to really move forward. I think that one of the biggest challenges that you have specifically in Gambia is that the lack of infrastructure. You will find that in the Western world, it's so easy to get connected, get your business online, start selling. There's a FedEx or a UPS that can do the delivery. It's so seamless, it's so easy. Here you find that there's so many different obstacles. Like Francis mentioned, there's the cost of getting registered, getting your business online. How do we help you? How do we link you with the right people to get you to solve that problem? How do we link you with the startup incubators to help you get started? From there, I mean, how do you help link you with trainers to help you to understand the importance of a financial tool and to help you to use it? And so with Insys Global and AfriJula specifically, what we are looking to do is to be able to tie an ecosystem around AfriJula as a digital financial tool that allows them not only to get that 360, to allow banks to get that 360 view into their business, but to also really maximize the benefits around them, to be able to really leapfrog into the 21st century. And I think that's really what what I find to be the most exciting about what we are currently doing now.
Thank you, Sid. It's very interesting, and I see already some complementarities that I would also like to discuss with you. Francis, please, can you share with us your experience and your solution that you are bringing to the table? Thank you.
Yeah, thank you very much. Some context is that in Sierra Leone, we have, it's a pretty nascent ecosystem. In general, the entrepreneur ecosystem is nascent. The fintech ecosystem is probably even more nascent. And thanks to the amazing work of the UNCDF in the past 3-4 years, we are now moving to build a fintech ecosystem. The work with the FinTech Challenge, together with the Bank of Sierra Leone, has how should I say, it has catalyzed, unleashed some good ideas. But once again, when we talk about solutions, I would like to again look at sectoral, and also not to divorce these FinTech solutions, because it's kind of very nice, the technology. There's a lot of FinTech in Sierra Leone, actually, but it's first generation, it's all payments, and it's dominated by the MNOs, the mobile companies. It's interesting, but I want to go beyond that. And then you look at the economy and you see the solution to financial inclusion has to focus on the informal sector, because if we are to diversify this economy from a rent seeking, which has not really done anything, into value creating, you look at the agriculture sector, which is 70% of women, which is one of the most promising sectors that can diversify us away from all these diamonds and gold, but also can create significant amounts of jobs in the rural and in the urban areas, has the potential to link poor women, in particular, into the supply chain and have a multiplier effect. Then the solutions, I believe, needs to focus on how do you get that informal into the financial side. In our incubator, for example, half of our incubatee startups are in agriculture. So you see a lot of young people moving into that. And then it comes to the financing needs. You have the startup capital, you then have capital for your minimum viable products, and then you have for growth. The amazing thing with FinTech is that it has the potential to address seed capital, so you can have crowdfunding platforms, and we set up the first crowdfunding platform in Sierra Leone just for the agri sector, with a specific focus on young graduates coming out of university. Why? Because these young graduates are the ones going to buy from the women in the village their produce and adding value to it and bringing it. They don't have capital. How does FinTech allow them to do that? Yes, you have the challenge of equity crowdfunding as opposed to debt. We're not there yet. Again, Hilda mentioned the regulatory environment has to catch up with that. So so our solutions is looking at the informal sector, which is huge. You cannot ignore that. Most of the people who have bank accounts in other formal sectors, they are finding those SMEs. We need to look for solutions. And then somebody mentioned open banking. I think that's has some work to do, but you can start with data sharing. How do we share data between various entities like the mobile companies? You can also look at, for example, here, you need to show your electricity bill, but many people don't have a house. It's the landlord who has this electricity bill. How do you do all of this? An ecosystem approach. So we participated in the UNCDF FinTech Challenge, and when we did all this analysis, what we begin to see is that a marketplace banking platform that allows you to go out, and I mean go out into the provinces and you begin to onboard people on behalf of formal financial institutions is one solution. It's very, it's very basic, it's very tiresome, active, especially when we think about all the obstacles that people face. So my input into the solutions, and of course building on all my colleagues, is that sectoral approach, is looking at how do you get the bulk of the informal sector into the formal sector without requiring them for all kind of papers and documentation. And I also want to just agree with Nazir about credit, because most of the time, really, for our startups, credit is not what you need, because to get credit in this country, you need a lot of collateral, and businesses don't grow on credit. That's what we need to understand. Businesses grow on capital, seed capital, growth capital, and how do we structure the system, the regulation to allow, for example, using a fintech platform to provide seed capital, to provide growth capital. So that's my take on this, on the solution part.
Thank you, Francis. It's very, very interesting. And it's been very interesting to hear from you, from your experience. Just maybe to share some questions from also the audience. Maybe this is more for Nazir. If you, after having listened to these experiences, what's your take, or what's your, let's say, suggestion as a fintech game changer, I would say?
I think developing ecosystems, requires a few steps, but core to those steps, as has been mentioned a few times, firstly is creating access and identity for people. As identity is the root of the entire financial services system. You can't get a loan, you can't get a bank account, you can't create anything without identity, and that applies to businesses as well. They need to have a structure and a formal identity. So making it easier and more accessible for them to create that identity would be core. Payment systems is also critically important, the fundamentals of transactions, because all the rest of financial services boils down to helping us do transactions today or doing transactions tomorrow. So you must have the transaction channel as effective as possible and as distributed as possible and as accessible as possible to everyone. And then critically, the last point I'm hearing, as Hilda's pointed out, Francis, and I think Sidi, which is an area that we focus on, is education, right? People need to understand finance. They need to understand from the context of, as a consumer of financial services, of a person doing transactions, but also for their businesses. They need to understand how to manage risk and financial risk within their business, what forms of capital are best, where to get those forms of capital in their markets as easily as possible, and what types of capital suit whatever situations. As Francis has also pointed out, debt is not a good solution for small businesses in general, quite honestly, but particularly in a situation like today under COVID-19, maybe in some specialist forms such as invoice or trade financing, where you're basically pre-funding invoices that are taking long to get paid. But in general, we need to look at systems as to distributing other types of capital, be it through crowdfunding, be it in some form of quasi-equity, or through subsidies and grants from government level to support that entrepreneurial sector to ensure that they survive and continue to thrive.
Thank you very much. Thank you. I don't know if the other panelists would like to complement.
Yeah, I think Ariana, just one point from me. I want to say that I remain optimistic about the future. That definitely SMEs are going to survive. If we just aggregate some of the lessons from the panelists, driving the ecosystem approach, thinking about education as a key aspect to financial, but of bringing prosperity and durability at the end of it all. I think fintechs are going to play a key role. People like us, Pesesha, we're really at the front line of driving that acceleration to helping these businesses survive. And we want to continue to do that through collaborations. And so I welcome all the collaborations for us to be able to get there. And lastly, I want to mention that, at the end of the day, I think it's going to be really about the intentional effort we all make as all stakeholders, including the panelists in this conversation, to make it happen. And I'm really glad to be part of that conversation. And as a by the way, I want to say that everyone should sign up for the Catapult next cohort. It's one of the best programs. Thanks to Nazir, we have been able to understand public-private partnerships and, of course, really accelerate our motivation to really help SMEs to scale to the next level. Thank you.
Thank you very much, Hilda. I have another question from the audience. Then I'm afraid we have to close. It's about your experience as a fintech with the more traditional financial sector, let's say. So maybe, I don't know, maybe Sidi or Francis, would you like to complement to address that in a few minutes, please?
Sure. Maybe Francis, you can go first, and I can.
Yeah, because I was getting a question here about the biggest barriers for fintech solutions to scale, to access finance, and then the question about our relationship with traditional institutions. Yeah. Well, you are disrupting, legacy business models. So you're going to have, but I strongly believe that it's not about this getting rid of banks. It's not about disrupting. It's disrupting their business model, really. And the more you take an approach to them that this is actually for the benefit of all, the more they are willing to. So, I mean, in the MVP we built, we are going to build it with 2 established banks in Sierra Leone and 1 microfinance bank. Because what you come with a value proposition. You don't come and tell them in their face, you have so much overheads, No, come with a value proposition. Yes, I mean, really, because people have gone there and say, you're not going to survive, you can't get. They want to access, and we don't want to be a bank. We do not want to have a banking license. We would like to work with established financial institutions, etc. So our relationship, from our perspective, has been very good with them because we have looked at the value proposition. But I know there is antagonism between, especially MNOs and the formal banking sector. There is a problem, and that regulation is not helping that part also because it's not very clear. And compliance is also an issue. When the MNO must share this data with the bank, they refuse, and vice versa, and there is no compliance. So enough of that before I get into trouble.
Thank you very much. Sidi, would you like to add maybe, you have very few minutes.
Sure. So I think Francis touched on all. I think the banking sector is also under challenge. Is also they're facing a challenge. I mean, they've also been hit hard by COVID, and I think there's a lot of uncertainty as well that they're facing. So I think when a few years back, they had the challenge from the MNOs, and that's mounting. And they are, of course, worried that there might be challenges from other sectors. And I think now what is necessary is to just have a continuous conversation with them to help them understand. I think initially when you engage them, you find that the immediate reaction is, no. You guys are here to disrupt the market. We don't want to go anywhere near you. But I think it's to really help them understand that disruption is a mutually beneficial relationship. By participating in the disruption, they get to benefit. I think where disruption becomes a loss making is where you sit on the sidelines and insist that you will do nothing when there is forward movement. Then the chances of being left behind are high. But if you are part of the disruption, if you are participating in the change, then you're more likely to benefit from that change in the long term. Because ultimately, what is clear is that we cannot stay where we are. I mean, COVID has said we must move, the world is moving, and therefore we must all really look towards how do we create a new, more sustainable ecosystem that allows for the unincluded to be included. Because I mean, ultimately, any data you look at, I think based on the last study done by UNCDF, I think only about 12% of the population were banked. So if anything, there's a huge market potential for the banks. And I think it is about how do we work together to untap that market potential and to expand the business potential for everyone.
Thank you, Sudi. Thank you very much. We are about to close because we are over a bit over time. Before closing, maybe I would like to give you the floor last time for a call to action. Maybe Hilda, would you like to share your call to action on behalf of this panel?
My call to action is let's collaborate to help SMEs recover, because they are the backbone for the economy. If we don't help them to recover, then let's not think about economies to be much stronger after the COVID period. Thank you.
Thank you, Hilda, and thank you all the panelists. We are about to close. I would like to personally thank you, and on behalf of UNCDF, it's been a fruitful discussion. We'll be sharing all the questions that we have received, and in case we haven't addressed them, we will respond to the audience. Thank you again. Thank you to the Singapore FinTech Festival for hosting us, and UNCDF is looking forward to collaborating with you. Thank you very much.
Thank you. Thank you.
Thank you. Thank you.